This is Business Breakdowns, powered by Microcap Club, a series of deep dive conversations with microcap companies and the investors that know them best. Our goal is to explore the inner workings of microcap businesses while giving our community direct access to compelling companies and their leadership. I'm Ian Castle, founder of Microcap Club. Microcap Club is a private community of the world's best stock pickers. Since 2011, our members have profiled 1,500 companies, and over 300 have turned into multi-baggers. That's at least one big winner every month for 14 years. If you enjoy finding great companies early, well before Wall Street pays attention, Microcap Club is where you belong. I hope to see you in our community. And now a quick disclaimer. The purpose of this conversation is for informational and educational purposes only and should not be construed as a recommendation to purchase or sell any security. Microcap Club is not a registered investment advisor. Microcap Club, its partners, members, subscribers, guests, and affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security.
Welcome back to Business Breakdowns. Today we are joined by Serge van Herck, the CEO of EVS Broadcast Equipment, a company powering some of the biggest live broadcasts in the world, from major sport events to global media networks. Alongside me is our expert co-host Gert Kampert, who will help unpack the strategy behind EVS's growth and technology leadership. In this conversation, we dive into how EVS creates the replays and live production tools used by top broadcasters, their ambition to reach 350 million in revenue by 2030, and how AI acquisitions and the US market are shaping the company's future. Let's get into it. Thanks for joining us today in this business breakdown. And before we jump into it, Serge, could you give us a brief overview of your professional background so we sort of get to know how you got to be the CEO of EVS?
Thank you, David, and thank you for giving me the opportunity to join us, or to join you here tonight, of course. So, a few words about myself. I'm a CEO of EVS since 2019. To be correct, it's September 2019. Before that, I've been more than 10 years CEO of another Belgian technology company in satellite communication. So my background, in fact, is indeed technology, Belgian companies in the broadcast industry, and typically with a growth objective and to make sure that we sell to customers around the world. So that's, in a few words, my background, and I'm happy to say that this year it will be 20 years that I have that role of CEO, but for different companies.
That's really interesting, and congrats for the anniversary, I guess. So,
Thank you.
that said,
You're making
the
younger.
floor is yours for. As I was saying, actually, before we get in the presentation, let me just remind everybody that you may type your questions in the chat, and we'll try to go through all of them after the presentation. And that said, the floor is yours, Serge, for the presentation, and I'm looking forward to listen to it.
Good. Excellent. Well, you know how this typically starts with a disclaimer that everybody knows. When we are a stock-listed company, we're looking also to the future, and there is always uncertainty about the future. And so I'm sure that everybody understands that that is also the case for EVS. So what will we be talking about this evening? So we'll talk about who we are, what we do, why we do that. So when we talk about who we are, we like to say that we are a leader in live video technology for broadcast and new media productions. And it will become clear what we mean with that. What are we making? We are, as I said, a technology provider. So we sell technology, hardware and software to customers around the world, typically for doing replays and highlights, video assistance, for asset management, video asset management, routing and media infrastructure. So we're really a technology company focusing on that live production of important events, be it sports or news, typically. And why do we do that? Well, I will use a slide later on, and it will become clear what we like to say about what we do and why we do that, of course. So I'm Serge, the CEO, as I said, joined in September 2019. Here you see the leadership team of EVS today. So we have a quite strong team of professionals, of colleagues who have more than 20 years of experience within EVS, at least 3 of them. And we have several others who have more than 20 years experience in the broadcast industry. Not going to read all the names, but I'm really happy with such a strong team. And you will see as well that the results that we've been generating over those last years indeed are not by luck, but with a clear plan and with strong competences around the table. When people ask me what we do, we like to say that we create emotions. We create emotions for billions of people every day because our technology is being used indeed by customers around the world to create that live content. And again, be it sports, be it news, or be it entertainment, live content that goes on air, be it on a television or on an iPad or on a phone, whatever type of digital media is being used. To create that content, most of the large players are using our technology to create that. And that's why we like to say we create emotion. But we also want to make sure that when our customers buy our technology, they also have a return on their investment. And that's why eventually we like to say, well, we create return on emotion. That is typically what we try to do for our customers around the world. So to give a bit more context about who we are a Belgian company. We have in the meantime more than 34 nationalities. We have our headquarters in the east of Belgium in a city called Liège. We have more than 20 offices around the world. I'll show you later on the map of the world to show you indeed how close we try to be with customers. We recently announced our figures for fiscal year 2025, and we are further growing. So we are delivering in 25 a revenue for the first time above 200 million, 208 million. With a strong profitability, and if you look on the slide here, you see indeed for 25 our EBIT, our earnings before interest and taxes, we're 43%. So we are at around 21% profitability on EBIT level. So we are indeed a quite strong financial company, which is indeed linked to a premium brand that we represent. It's definitely very well known that in our industry we have a premium brand, very good products, but also typically expensive products. But that is indeed what customers are willing to pay for our quality that we bring to the table. The company was founded in 1994. Today, we are more than 800 colleagues. When I joined in 2019, we were 450. So we've been not only growing in revenue, but also growing in team members, of course, around the world. And we are publicly traded since 1998. What is our ambition? When we were reflecting upon our ambition and our strategy at the end of 2019, we set our strategy called Play Forward, and our ambition was to become the number one solution provider in the live video industry by 2030. And we also said, well, that means probably that we need to increase our revenue from about 100 million in 2019 to more than 350 by 2030. So we have a clear ambition that we've been putting forward. We've put a clear strategy next to that, and you'll see the results of that in one of the next slides. But let me first talk about who are the customers that we serve. We have typically three main type of customers. We like to call them production facilities and service providers. Those who typically have trucks next to the venues to produce that live sport content. We have sport and event organizations themselves. Think about the Winter Olympics. Think of the World Cup, for instance, that is done with EVS technology. And last but not least, and the biggest part of our customers and growing year after year are those broadcast and media networks who use our technology for creating live content. To put a few names on the table, here you have a slide with some names that are probably well known to many of you listening here today. I can take a few names like NBC, Fox Sports, ESPN. We can talk about Rai in Italy, RTL, and you can go on. Typically, our customers are T1 customers around the world producing live content. That is the best way to describe who our customers are and what they do. What is important also to remember about EVS is that we also empower those major sporting events which happen every 2 years, or in the even years, if I may say it like that. And I would say that's special to us because while normally we are selling our equipment and technology to customers, for those opportunities, as they are so large, we also rent equipment. So that's what we call our big event rental business. Every 2 years, there is something like 14 to 15 million euro revenue being generated by renting equipment and providing support services for those major events. So if you look to the beginning of the graph, well, it started in 1996 with the Olympics in Atlanta. And this year we've done, and we are still doing at this moment in time, in fact, the Winter Olympics and the Paralympics in Italy, in Milano Cortina. And we'll soon do also in North America, Canada, US, and in Mexico, the World Cup FIFA soccer tournament. So that's always done with EVS equipment at the heart of the production. And remember, for instance, if you see a replay or a highlight, think of EVS. 9 chances out of 10 are that this is being done with EVS technology. And on those events, definitely it is absolutely done only with EVS technology. And we're very proud about that, of course. You see a few pictures on the bottom that shows some of our colleagues being on site. While we are a technology company, we try to be close to our customers, especially in those big events where it's mission critical and where you cannot afford any mistake, of course. And when there are issues, well, our customers expect us to be there within very short notice and help them solve any problem they might have. So remember, next time you see some of those sporting events that this is done thanks to EVS technology. Now, going forward, when we talk about big events, typically there is another even bigger event called the Super Bowl in the US that is also powered by EVS technology, but that is not there. We don't need to rent equipment. Those are typically American customers who use our equipment to produce the Super Bowl. And we're quite proud that every year, effectively, you can see the Super Bowl on television and on any type of screen thanks to our technology. So what do customers really like about EVS? Well, definitely it's because of those different elements that you can see here. First is the solutions that we bring to the market are really shaped for live conditions. And we are really in live environment. And remember, people are under heavy stress because what you eventually see on the screen has been created or selected by people who are making choices, and they want to make sure that the equipment that they use for bringing that on air is mission critical and as reliable as possible, and of course with the needed features. So that's what we bring. We also in transforming and solid partner. We help our customers to reflect upon their workflows, transform their workflows. And so we have a kind of consultancy support that we provide to them to reflect upon how to better operate and use our technologies for doing that. We like to say that our strategy is about customer intimacy. While you see a lot of technology being developed by us, out of the 800 colleagues, by the way, we have 340 engineers. So we are heavily focusing on technology development. But at the essence, still we are delivering solutions for enabling the workflows of our customers. And every broadcaster, any media company has different thoughts about how they should produce content, and we are assisting them to do so. We have a highly responsive customer support around the world. When you talk with customers, they will all tell you that EVS is the gold standard, and not only when it comes to reliability of technology, but also when it comes to reliability of the service that we provide. And again, we are in a live environment, and they're definitely very eager to have a partner like us to provide that gold service. And last but not least, we keep innovating and addressing that way the most demanding needs of our customers in our industry. Now, if you look to a few of our numbers, here you see the last 10 years, and you heard me say that I joined in 2019. So here you see a graph starting 2016 with revenue numbers. We saw that before I joined the company was a bit losing ground, and that was definitely because there was a lack of clear ambition and strategy. And since I joined with the leadership team that you've seen, we've been able to turn around the company and get back into growth mode year after year. And so you see that indeed in 2025, we do a new record revenue number of 208 million, which was indeed the fifth consecutive year of record revenues that we've been able to generate. When we look to some other key numbers of 2025, we see that our order book further increases with 11%. We see that our revenue increases, of course, with 5%. If we filter out the big event, the rental business that we have only in the even years, we can even demonstrate a growth of 14%. We had some headwind of exchange rates last year. So if that exchange rate would have been constant, the euro against the dollar, we would have even done 211 million. But okay, it is what it is. Our EBIT was slightly below that one of the year 24 with 43.3. And again, at constant exchange rate, we would have been delivering a further growth. Net profit, 38 million, showing indeed that we are a strong company with no debt, by the way, at this moment in time, and further growing now with a team that is at this moment in time close to 800 colleagues. Where are we based? I told you indeed that we have more than 20 offices around the world. Here you see indeed where they are located. The blue ones are typically the offices that also have development centers. And you see that we have that, of course, in Belgium, but also in the Netherlands, in the UK, in France, and since recently also in Portugal. So we have most of our development capability in Western Europe. We acquired another company, well, two companies in 2025 in robotics, one in France and one in the US. And since that acquisition, we have now also a development and a production team in Allendale, which is close to New York. And you'll see indeed also that we are quite well represented in Asia, but especially also in the Americas and especially North America, where we have now 4 offices, one in New York, one in Allendale, one in Los Angeles, and the other in Denver. So that definitely shows that we have quite some big growth ambitions in North America, and that we're also delivering on those growth ambitions. Talking exactly about that, North America is for us a very big growth engine. We see here how we've been able to increase our order intake with live audience business customers in North America. That is for us definitely an important contributor to the growth that we are experiencing. We see also that our pipeline is significantly increasing. We've been investing into our sales community also over the last year, and we see the results. And with the acquisition of Telemetrics that we did last year, we've eventually increased the number of colleagues above 100, while at the end of 24 we were about 50. At the end of 25 we've reached the bar of 100. So an important growth on the human resource side in the USA. Then when we look a bit to our past results and we look forward to our ambition, here you can see a graph that goes from 2019 to 2030. The orange bar shows a linear growth to get from 100 million to 350 million, our objective by 2030. And that showed that we had to do an annual growth of about 12% a year. The blue bars that you can see is the reality that we have been delivering. So that shows that we are ahead of plan and that indeed we've been able to generate more than 12% growth year after year with our strategy. What you can also see on the right-hand side is that we foresee to further grow with our existing product portfolio. But we also know that to achieve that 350 million euro in revenue, we'll have to do some more acquisitions. We are a cash-rich company, so we know that we have the means and the capabilities to do more acquisitions over those next years. So our confidence in the confidence in our capability to achieve this ambitious growth is definitely there. When you look to the solutions that we bring to our customers, we've tried to simplify that with the different product families that we have. I'm not going to go too much in detail, but we talk about LiveCeption, which is really our solutions for live production, replays, and highlights. If you see that replay on the television on your screen, it's typically made with our LiveCeption technologies. MediaCeption are all our software and hardware solutions for managing live content. Media infrastructure are the solutions to process and to route that content. Power Vision are specific solutions for VAR, so video assistant refereeing. We have a flexible control room, which we've been launching at the end of last year. And last but not least, our T-Motion capability are the media production robotics that are being used in studios and in venues, which follow the acquisitions of two companies we made last year. To give you an idea of a studio and showing where different technologies are being used by our customers, what we've been trying to do over these years is indeed further expanding our product portfolio and further make sure that customers are buying more of our different products as together in an ecosystem. They are more valuable, of course, than independently. And here you can see indeed in such a studio where you see, for instance, on the top, the studio where you have the presenters. Now with the T-Motion technology, so we have the robotics available as well. We have in the newsroom quite some solutions. We have, of course, in the production control room, our servers. We have also Neuron View to help display all the images that are being recorded on our devices. And on the right-hand side, you can also see that with Cerebrum, we have also quite good technology to monitor and manage the whole setup. So we definitely have been increasing the coverage of the solution in such environments, and that helped us indeed to realize the growth that you've been seeing. We focus heavily on innovation, of course. We are a technology company. We have an innovation lab with quite some bright engineers focusing on quite some different elements like cybersecurity, remote production, live IP, the cloud. But I guess what most will be remembered here is artificial intelligence. And we did not wait for ChatGPT to be launched to understand that this kind of technology would be groundbreaking and would help us also to improve our own products and the way we work. So with our own AI and generative AI technologies, we've brought throughout the years, over those last years, already several capabilities built in certain of our products to increase the features and capabilities of our products. Here you have a few of them. So for instance, on the Zebra, you have the AI-powered offside line technology, which is very useful in a soccer environment or in football environment where you can automatically draw the line and where it's being done in the manner of 1 to 2 seconds, which is of course very important in that environment. Even more important is our extra motion technology that we've been bringing to the market. Extra motion enables, for instance, super slow motion capabilities out of any camera. If today or before we introduced that technology, you were seeing nice replays that was being generated by very expensive cameras with a high frame rate. With our own technology called extra motion, we are now transforming any classical normal broadcast camera into a super slow motion camera. So we are really enabling our customers to use now any type of camera to create great replays. And to give an example, if you look to Formula One replays, well, think now that 2/3 of that content that you see has been generated on the spot by our AI technologies. And we have some other features which are really very useful, like cinematic effects, like deep blurring. And last but not least, what you see here is also our LSM via Zoom, which is enabling operators to zoom in on the action, follow automatically players, and clipping out of that. So for us, AI is definitely something which is already generating quite some buzz, and even more important, also quite some nice revenues. So AI for us has been already something we've been working on for many years. So on the left-hand side, you see some of the technologies that we use in the products that we bring to our customers. Typically for, on one hand, increasing the productivity and the automation. That's where everybody expects AI to play a role. But even more important for us, it's about creative tools, further improving the storytelling that our customers bring to the screen. And that is where we bring most of the value with our AI tools. And of course, internally, we also make sure that colleagues use the right appropriate AI tools to increase efficiency, be it in R&D, be it in finance and legal. In marketing, we really try to make sure that our colleagues know which tools to use to further improve the quality and the efficiency of their solution, of what they do. I just wanted also to show this overview of our commercial pipeline as we see it for the future, because for us, this is a leading indicator showing indeed if we want to continue our growth, we also must see more commercial opportunities. And this graph exactly shows that. And we see that over those last years, we've seen an increasing number of opportunities, which indeed enables us to fuel that growth that we have already delivered, but that we want to continue delivering. So that is for us an important indicator that gives us confidence for the future growth that we envisage. We recently announced our figures for 2025, and we also gave a guidance and an outlook for 2026. I'm not going to read the whole text, but I think what you should remember is what you see on the bottom here is that we expect our revenues this year in 2026 to be somewhere between 220 and 240 million euro. So we definitely expect to continue our growth, and that will bring us, that will continue, that will keep us on that growth path to achieve the 350 million that we foresee by 2030. So as a conclusion, before I take some questions here, as a conclusion, a few thoughts here. So when we look to the figures of 2025, we see that we are progressing well towards our BHAG, our big, hairy, audacious goal of becoming that number one by 2030 in our industry. And we see that our growth or that our strategic pillars are definitely demonstrating the growth that we expected. We see that with our EPS, earnings per share, that we will be able to deliver a dividend of 1.2 euro per share. I just mentioned it, but the growth will continue this year. We expect to land the year between 220 and 240 million euro, including the big event rental, as this year indeed we have the Winter Olympics and also the FIFA World Cup happening. And last but not least, we still expect that an important part of our growth will come from North America. Although last year we have been through a tough period with tariffs, we've not been stopped in our growth. On the contrary, we see that customers in North America keep accelerating in the use of our equipment, and that translates indeed also into our revenue numbers. So, and next to that, of course, we also try to make sure that we keep our expenses under control, so that at the bottom line we can continue delivering a high profitability, as our shareholders have been used from us over those last years. So those were the few slides, David, I wanted to go through with you and all participants here, and I'll be happy to take some questions.
Are you a new or experienced microcap investor? Do you want to meet microcap management teams as well as other microcap investors from around the world? Planet Microcap hosts the highest quality in-person microcap events in North America. The mission is to bring the best microcap investors, companies, and allocators together to gather, connect, and grow. Visit planetmicrocap.com to learn more about our Las Vegas and Toronto events.
That's great, Serge. I really enjoyed the presentation. So maybe, Gert, you can jump in with your questions, and then if we get any questions from the audience, I'll be happy to ask them. And I also have a couple of questions for myself. So yeah, the floor is yours, Gert.
Okay, thank you, David, and thank you for that presentation, Serge. Also, well, I think you've also given a good picture of EVS and the evolution throughout the years. I remember it's the company started mostly focused on hardware for slow motion and replays, and then you broadened out from the sports to other live events, and from the hardware to also the software, and trying to build a real ecosystem, as you call it. And with the two acquisitions you did last year, that was also the start of another new division, T-Motion, that specializes in the production robotics, like you mentioned. Maybe just to understand for the listeners, this whole ecosystem where you do software and hardware and other things. The advantages for EVS is that mostly because you can cross-sell for the customers from the companies you buy, or are there other advantages also to that strategy?
Well, there are different advantages for customers. What they are looking for is indeed partners who can help them reduce the complexity. So we like to say that we bring more simplicity in the complexity, because technologies keep increasing in complexity. And so when you have different components that you have to bring together, it's becoming really hard. So they really prefer to have partners like EVS who can really take away that burden of integration, and having different solutions next to each other, different products, when you know it comes from the same vendor, that helps you indeed in reducing the complexity of the integration. So that's definitely a big question, or I should say, demand for our customers. They want to have partners who can take away some of the burden of integrating different type of technologies. So that's a very important element. Another important element for us is that by bringing different technologies together, that's the 1 + 1 = 3, we can do things that otherwise were not possible. Where if you think, for instance, you take an example of the replay machine, if we call it like that. That's the interface, the human interface between the technology and the human to create that replay that you see eventually. So we have thousands, and more than 7,000 EVS operators around the world using our interface. And by using that same interface that they were using before for doing a replay, now suddenly we give them capability to do something completely different in the studio, of course. For instance, calling some content from another server, switching on lights, doing certain reprogramming from equipment. So we are bringing really added value in that ecosystem by bringing technologies or integrating technologies together. And that is for our customers a big help, because typically at the end it will do two things. It can improve the quality of the storytelling, or it can reduce the total operational cost of our customer. That is typically where our technology is being used, for doing one of those two things.
So the ecosystem actually helps broaden your moat compared to your competitors, and that is what helps take more market share, and that helps you on the way to the big, hairy, and audacious goal of the 350 million for 2030. But I think you've also said that without acquisitions, you'll probably reach somewhere a bit above 300 million by 2030. So acquisitions are also still needed in the coming years. Just to get an idea, are there many potential targets out there to look at in the coming years? And how is the competition for those acquisitions? Do you have to face a lot of other competitors if you want to buy a company, or are you one of the few doing this acquisition strategy?
Well, if you look in our industry, and if you walk around, for instance, at a trade show called NAB, which will be in April in Las Vegas, or IBC in Amsterdam in September, you will see hundreds of companies in our industry in different niches, smaller ones or bigger ones. So there is a big pond of companies that are active in our industry. So on that side, definitely there is sufficient, I would say, choice. And just to say, the number of deals that we look at per year is typically above 20. Last year we did 2 acquisitions, but we see sufficient opportunities passing by to be able to be selective in our choices. We also see that when we look to the companies we acquired last year, those were typically family-owned businesses. They also typically look for a partner of which they think will help to grow their company, and where they can leave their legacy. So it's not only a number, it's not only, I would say, a question of how much do you pay for a company, but the one who is selling also wants to make sure that the company stays for those next years and has the capability to further grow. And they've seen that the acquisitions that we've been done over those last years at EVS, that's exactly what we do. We buy those companies, we grow those companies, we give them more means so that they can indeed further grow their revenue and eventually also the profitability. So that's something that in the meantime is clearly seen by different players in the industry, and that generates opportunities for us, and sometimes they only come and talk with us. So we are often not in a competitive situation to buy a certain company. I'm not going to say and there are definitely situations where we're in competitive environment, but up to now we've never lost to competing bets. When we are, as I said, we are very selective, and sometimes we just say, well, what is being asked here is just not in line with our own valuations. So there is no reason for us to continue any discussion here.
Okay, that's good. And also gives you an edge probably compared to private equity backed competitors that have a more short term orientation. Maybe just a question on the backlog, because with the presentation of the 2025 results, you mentioned that the backlog is growing, but mostly the longer term part of the backlog for 2027 and beyond, because you're getting more long term contracts. Is that some deliberate strategy from EVS itself to aim for more of those long term contracts and maybe get some more recurring revenue, or is it something the customers are asking for?
Well, definitely it's a strategy. It's part of our strategy to have more longer term contracts. And big part of that is linked to the service level agreements that we offer to our customers. So we've been growing indeed that part of our business very nicely over those last years. And we see that the contract duration is increasing. And that is why indeed you see that longer term contract value is increasing. So for us, it's recurring revenue, which is a good thing, of course. And it is indeed on the longer term. So we typically start seeing contracts 3 to 5 years. Sometimes even longer. Those are the exceptions, of course, but we see that customers are willing more and more to take longer-term service level agreements with us. And that explains indeed the increase in our order book, and especially in the longer-term order book.
Okay, and like you already mentioned in the presentation, the US is where you see the most opportunities maybe in the coming years. So you also doubled the personnel from 50 to 100 people in the past year, also with the acquisition, of course. So we should expect the US market to become an even bigger part of revenue in the coming years. But that, of course, also means that your exposure to the dollar and euro dollar rates is going to increase. Are you thinking of ways to try to hedge your exposure to movements in the dollar in the future?
Well, most of the dollar that we generate is indeed in North America. The rest of the world we sell in euro. So it's clearly there where we see the biggest impact. The things that we try to do is also implement price increases. to at least partially offset potential impacts of that euro-US dollar exchange rate. We're also thinking, and that's more related to tariffs. If the tariffs further keep evolving, we have now also production capacity in North America. So when you talk about hedging costs, that might also be an opportunity that we have now. We did not. The production capacity that we have now is for our robotic capabilities, robotic production in North America, but potentially at some point in time we could decide to do more. But that's definitely not a decision that we've taken now, and that will further depend on the evolution of that exchange rate.
Mhm. Okay, and I think you also wrote that the sales funnel in the US has increased by 47% in the past year, if I'm correct. How should we interpret that, and what is the steps, or what are the steps from to go from the sales funnel to orders in the order book?
Well, the first thing is indeed to be able to grow, you need to see more opportunities. And with the hiring of more colleagues in the sales team, we definitely see that happening. So that means indeed that the hirings that we've been doing are generating the opportunities and give us more visibility on what's happening. And eventually, what needs to be done once you've seen a commercial opportunity is, of course, try to win it. And then that is how you get eventually into a revenue. And we see strong win ratios. So we know that once we can engage with customers, that we make good chance to win that. But the point is, of course, if certain customers don't know about our capabilities and product portfolio, they will not come to us. So for us, it's definitely trying to address a bigger total addressable market thanks to having more sales colleagues, but also using our indirect channels more and more, especially also in North America. And we've been seeing over those last year that we are growing also in domains outside of typical broadcast studios. We've seen certain American banks starting to use our equipment to do a live production of their shows or their information that they are sharing with their customers or with the different branches. We've seen houses of worship in North America starting also using our technology for making their live production. We've seen some major corporate customers and big tech players who do a lot of video production starting also to use our technology. So we see that in North America, we are really expanding beyond the traditional broadcast customers.
Okay, that's good, of course. New types of customers, but I'm also wondering with regular linear television becoming less popular and attracting less viewers these days with all the streaming alternatives. So traditional broadcasters are starting to get less viewers, less revenues. Maybe some of them are starting to have deteriorating financial conditions. Is that something that you're worried about, or are they that type of players? Is that only a small part of your customers?
Well, what we see, we have customers like that. There is no doubt about that. That are under pressure because certain of their advertisement revenues go to other platforms. But they still need the right technology to produce the content. And they typically need to invest into technologies like the ones that we bring to help them produce content that go to different outlets. So you think of linear TV, but they also use that same content to go to the social media platforms. And there as well, they can use our technologies to do so. So what we do is indeed, with our technology, they can feed the different outlets, be it linear TV, be it social media, and that is giving them efficiency, because with the same tools they can indeed create content that goes to different formats. And that is where we bring indeed value, because we can increase the storytelling quality and reduce the total operational cost by reducing the type of technologies and teams that they need to eventually feed those different platforms. So that's one kind of a customer. We have others, the others, if I may say it like that, who have platforms who are generating more and more content, who also understand that when they sell subscriptions to their platforms, that one of the main elements or content that will attract new users is live production, is live content. So more and more live content is really being seen to attract new subscribers to the platforms, and those platform operators are starting to play more and more with live content to attract new users. If you remember, it's now several months ago that Netflix was showing a live boxing match, and that attracted a lot of new subscribers, for instance. But that is typically where our technology is being used. And we can talk about that case because there has been some technical issues with that, but that was not with the EVS technology. EVS technology is for making the live production, but once it needs to be distributed over the internet, that's not EVS anymore. And that was where they had quite some problems, because they had many more viewers than what they expected to have, in fact. So for us, we understand that some of our customers are under pressure, but they need to invest to be able to reduce their total operational cost. If they typically they need to produce that content with less operational expenditure, which means typically less personnel. Some of those companies are downsizing in personnel, but they still need to invest in technology that enables them to do more with less. And that is what we see with certain type of our customers, while others we see them growing and who need our type of technology to be able to bring that live and typically expensive content to the masses.
I actually have one question for myself, and that's regarding the sales cycle and how do you get into the door of these large companies, for instance, Real Madrid or RAI, who are big institutions. And I would like just for you to describe a bit better how the typical sales cycle looks like. How long does it take to land these clients and convert them? And usually, yeah, maybe that dynamic. And then I have a couple follow-ups.
Yep. We have a lot of customers with repeat purchases, of course. So that can be very short sales cycles. That can be that they say, well, we need a few new machines. In a few weeks, they have the new machines. So that is what can happen with existing customers. With new customers that have important projects that can range from a few months to a few years. If I look back to, for instance, Al Jazeera, who was shifted to
Yeah.
EVS technology, I think that was at the end of 24, if I'm not mistaken, and we installed Al Jazeera in 2025 with the latest and greatest EVS technology. So they moved away from one of our competitors. That was a project that has taken close to 3 years, I think, from the first moment of talking to eventually signing an agreement. But it's such strategic, so important, and especially when they are selecting a new partner and moving away from an existing partner that they've been knowing for many years. It's like changing your ERP system. I think it's a good comparison. It's such an important decision that is changing your way of working in such a dramatic way that you want to be fully prepared in your decision making and then eventually in the implementation itself. So it can take up to a few years in the longest situations.
Understood. Yeah, that's really interesting. And actually, as a follow-up to that, you mentioned Al Jazeera switched from another provider. I'm curious on the competitive dynamics of this market. So is it like fragmented, which I guess is not, because this is pretty like um yeah, complicated technology, I would say. So maybe you could give us a breakdown of how the market is structured and the competition as well,
Yeah.
if that makes sense.
Well, you need to look at the different product families that we have. So you've seen that slide with liveception, media infrastructure. All those different solutions, when you zoom into them, they have different type of competitors. We don't find often the same competitor in all of them, but there are specific competitors in any of them. When you look to liveception, and I think you see that in our presentation that we did end of 24 in an investor deck, you'll see that we have a very high market share in that environment of liveception. But it's a total addressable market of something like 120, 130 million, and we are above 50% of that market. There are other markets like mediaception, where we have where the total addressable market is much higher. It's typically 500 million, and there we have a revenue, we have about 10 to 12% of that market share, and we are growing. So it's really, the answer is not the same for all of our products and solutions. What
Of
we
course.
know or what we see is that the biggest growth potential that we still have in front of us are with products or solutions like mediaception. That's a total addressable market of about 500 million, and media infrastructure, which is also about 500 million. And where in media infrastructure, we only have a market share of 5 to 6%, which we see growing, but our growth potential is definitely there where our market share is the lowest one.
Understood. Yeah, that's great. Thanks for the color on that. And I also noticed that you have a revenue target, but you didn't share exactly like let's say bottom line target, so to speak. And I'm wondering whether that is because you're focusing more on revenue growth and you think that will kind of take care of itself, or do you have an internal target and you just are not ready to share with the market, or yeah, maybe some color on that would be nice.
Yeah, no, that's a good question. And when we get the question, we say that our target indeed for our profitability is around 21 to 22% of revenue. So that
Okay.
EBIT, we stay on a similar profile as we are today. But we know also when we acquire companies and that in the beginning they don't generate the same level of profitability as we do. And it takes a few years to grow their revenue, to increase their margins, to eventually come to the same time of contribution as we are used to. But definitely our aim is to keep that type of profitability, and we are definitely not saying it's revenue with low profitability. No, we want to remain a sustainable company and having a sustainable growth with a sound profitability.
Understood. Serge, it almost seems like you're reading my mind because I was about to ask you about acquisitions and whether that that took a hit a bit on your bottom line this year, because I noticed your revenue growth normalized for FX um, was higher than the bottom line. I guess the bottom line even kind of decreased a bit if you look at net income, right? So I'm wondering how much of that is like acquisition effects, and what's the main driver for that mismatch, so to speak.
Yeah, there is part of acquisitions, but there's also part of growth, of hiring personnel to help us create the growth for the future. And remember, 2025 is an uneven year where we had no big event rental. This- and this year we'll have big event rental. So we always have that even an uneven year effect that also plays in our numbers. And that is why you see a bit lower profitability in an uneven year than an even year.
Makes total sense. And so I'm guessing the even year effect is already baked into the guidance you issued for this year. Um, that's interesting.
It does.
You're going to say something, Serge?
Well, we gave
Okay.
our guidance for revenue, not yet for EBIT, and that typically is done after our Q1 results.
Oh, okay. Perfect. That makes sense. And also in terms of I mean, you already spoke for the investment you're doing in personnel and investing in the future growth. Um, how are you currently thinking about investor relations and yeah, just connecting with the market as well?
Well, we are definitely well aware that it's important to communicate transparently and regularly with the market, and we are indeed looking at how can we further improve that. We are thinking of having another investor day later this year as well, and further clarifying our investing story. So we are aware that. It's important to provide even more information about recurring revenues, about software and hardware revenues. We start definitely um, preparing a story that will indeed better detail those different elements, where indeed investors, shareholders will see that indeed, while sometimes we're mainly seen as a hardware company, that's not the case. 85% of our engineers are software engineers. So we're selling also more and more software capabilities to our customers. We also generate more and more recurring revenues, but we understand that we have to better present those numbers to the market. So those are definitely some of the ideas we have for the future to focus more on those elements to further increase the confidence of our shareholders or potential investors.
Makes total sense. Yeah, for sure. And maybe taking a step back, again about acquisitions, I was just wondering whether you have like a um, laid out criteria. You mentioned maybe some of the acquisitions you buy are not at the same margin profile you of the overall group, so to speak. So yeah, maybe if you could speak for the criteria that you use in acquisitions.
Well, we've been updating our criteria up to a year ago. We were limiting ourselves to companies up to 100 people, for instance. In the meantime, we're 800, but the 100 came from the moment that we were 450. So we're increasing the size of the companies we're willing to look at. That's an important element. One of the key criteria is, of course, the complementarity to our product portfolio and solution portfolio. That is definitely critical for us. It's also, of course, about values and the way of working, reputation that the company has with customers. Looking, of course, at the roadmap, because we want to make sure that there is a good engineering team working on things that will be of use in the future, that we don't buy old technology, but also a roadmap of which we think is really valuable and will be that we will be able to integrate into our ecosystem. So we have quite some criteria. Of course, valuation is an obvious one. I didn't mention that one, but we understand our own valuation and our own multiples. It will be difficult for us to go beyond that or far beyond what we have as own multiples. So that's an element that we definitely are looking at as well.
Mm, makes sense. And now a bit more of a metaphysical question, so to speak. But I'm really curious on how you see your role in the company. What do you think your main kind of job is, so to speak, if that makes sense? I'm just curious of how you see that.
Oh, that's an easy one, as we are so deeply entrenched in the sport environment. I'm the coach of the team, and I'm trying to make sure that everybody knows what is his or her role, what our ambition is as a team, where we want to get and to motivate everybody to play at their best level, and that demands. Training, improvement, and always continuous improvement. So I think my role is that of a coach, trying to make sure that the team continues to further improve, try new things sometimes as well, and always things bigger.
Okay, makes
And
sense.
in,
Yeah,
and internally,
that's
I
a
like to
great
use
analogy.
the coach or the captain of the ship. I'm also a sailor, and I like also to say, well, we are like on a ship, like on a sailing boat. We have a crew, we have several team members. Everybody needs to understand what he or she needs to do, where we're heading, why we're doing that, and sometimes be careful when there is a big storm coming or something that gets in our way. Then we have to tack. Yeah.
Interesting. Maybe just to really wrap up, what could be a possible storm that could come your way that it's a risk, I would say, and what are you doing about it?
Yeah, well, hey, we had a big storm in 2020. I remember COVID. That was for us quite a storm because half of our customers at that moment in time were stopping any activity. I remember there was no sport anymore. Everything stopped. And then the news channels had to adapt their way of working because 80% of their personnel was working from home and they still had to do their production. So for us, that was a difficult year of transition. But we definitely are not unhappy with the result. Eventually, we continued investing in new technologies, supported our customers. And okay, we had, of course, a revenue loss, but we still ended the year profitably. So that's a major example of what could happen. But other things that are high on the agenda, on the risk agenda, is, of course, well, what happens with a cybersecurity attack? But I think that's for many companies applicable, of course. What happens if US tariffs double tomorrow again for whatever reason? So those are clearly some scenarios that we know what we need to do if it happens or that would happen. But there will always be things that, yeah, we did not expect, like COVID. I know it's easy to say that, but we did not expect such a thing to happen.
If you enjoyed this conversation, I'm sure you'll love microcapclub.com and subscribe if you'd like to follow along. Thank you so much for listening.